Hey guys, welcome back to my channel, Forex Flossing, where you can find quick, simple explanations for Forex concepts. So as you know, I've started a institutional trading series explaining to you my trading strategy using a few technical indicators to inform my trading strategy in addition to other confluences. So right now I'm going to just do a drill down, just do a review of GU. This is the pair that we will be looking at, and drilling down from the weekly down to the 1 hour, where we will be taking a more in-depth look at how we're going to approach the market. So the first thing that I would do when approaching this pair is look at the weekly and look for a trend. Right away, I see this descending trend. Whenever I draw trend lines, I never count the active candle. So this is this week's candle right here. So I never include that when drawing my trend line, and I try to get as many wicks as possible because this is the weekly. I'm just merely trying to establish a trend and create a bias for where I believe price action is headed. So it looked as though this week's candle broke this trend line, this descending trend line. So we want to continue to drill down and get a closer look at what's going on with price action. And again, we see a little bit closer how price broke the weekly trend line. It did a little bit of retesting. It kind of looks like it's going up. However, these wicks are significant because it also shows that there is a little bit of resistance up here, right? So, because this is 4 days straight where it seems as though this level, this zone hasn't price action has not gone above it, right? Okay, so now we look at the 4 hour. The 4 hour is showing us that 1, 2, 3, 4, 5, 6, at least 40 hours price action has been held at this level, at this resistance level. And so this current candle is retracing this move to the upside. So that's pretty significant. This may just be a really strong resistance level that we need to take into consideration. So now I want to look at the 1 hour. And from here, this is where I want to insert my indicators. And those indicators, we discussed them earlier. It's our sweet spots indicator. This gives us our institutional levels. And so let's just review our sweet spots indicator first and foremost. So price action was rejected at this 1.27750 white tracer, and price has more so been held at a resistance line of 1.275 100. That's the lighter color tracer. So this darker tracer is the 1.2700 line. It's not popping up because I have take profit. That's where I've set a take profit, but this is significant. Like I said, at this level, at the 1.27500 level, price has kind of been held at bay within this 25 pip range right here. Right? Price action is just kind of hit a resistance, and it's continued to be knocked down. And it has definitely penetrated the 1.27 thousand level. It's been twice already. And I believe it's going down for a third touch. It's also respected, price has also respected this 25 pip zone, this 1.2650, and this 1 point, I'm sorry, this white tracer 1.26750, and then the 1.26500, that zone. Okay, so now I want to add on our daily high-low for Confluence. And again, I always change these to black. And we are looking at our daily high-low for Confluence with regard to looking at the levels that we think that price action may move to. And I also want to look at the weekly. Here it is, weekly daily open. And what you do is you take it, I don't know if I explained this, but you highlight it and you drag it and drop it onto your MetaTrader 4, and then it just it shows up. So here is, oh, and then we need our show weeks because we need to see what day it is, right? And for good measure, I want us to do our work HUD and our HUD. That helps us see where we are in terms of pips and also candle time. And that's it for now. Okay, so I know the reason why we have added our two other indicators, that being previous day high-low and daily and weekly open, is for Confluence, and also to help determine where we can predict price action to move. Right now, we want to form our bias, right? Okay, very good. So we do that within the hour time frame. Okay, so let's look at today's price action performance. This is our daily. The price action opened here. It We got up to the high of the day. Price action did not close above the high of the day. So what does that mean? That means that this high of the day is still our anchor, meaning price act, in order for us to say with just confidence that price is going up, is continuing up, we need to break this anchor. And so it's good that we can see here that we weren't able to break yesterday's high. And when I say break it, I don't mean wick, because, little side note, most of the time when price action wicks and it doesn't close above a level or a previous day high or previous day low, it's your broker manipulating the psychology of the trading. And that has nothing to do with what the banks are doing as far as institutional trading. So this is actually my broker manipulating that. And I will get into broker manipulation versus identifying broker manipulation versus institutional trading later on in our series. But just know that because price action did not close above yesterday's high, this high from this week is still in play. So it is a fair assessment to say that we will continue to retrace this impulsive move up, right? Because this is our weekly open. Price on Sunday, price started all the way down here and came all the way up here by Tuesday. And so now we're looking at price continuing to go down and retrace. Why? Because we have not closed above the highest high of the week, which was Tuesday. Okay, so hopefully that is clear. And that is what our previous high low tracer, that is why that indicator is so significant, because it just helps us eyeball where we're at. So now that we have determined that we will continue down in a retracement from this impulsive move from Monday, we now look at levels. We now look at our institutional hold levels. Okay? And that the nearest level for us would be 1.2700 right here. So now I'm going to teach you how to get it. So that we did all of that just to determine if price action is going up or down. We know price action is going down. Why is price action going down? Because price action did not close above the highest high from this impulsive move up on Monday. And so it is fair to form a bias that price will continue to retrace this impulsive move until it hits a significant level. What is that level? What's the next significant level, institutional level? It's the 1.27 thousand right here. Okay. It could even retrace down, continue to go down to this 1.26750. But this is the level that we are going to trade. Okay. And from where price action is now, that is almost 40 pips. All right. So now what do we do? I already have it set up. This is what we do. We scale down to our 15-minute time frame first, right? And on our 15-minute time frame, we identify where price is and again what level it's trading near. And we want price to start to trade within a 25 pip range. That is what this red box signifies. This 25 pip range. I'm sorry, this isn't even 25 pips. This is 13 pips. We want price within this box. Why do we want price within this box? Because price is showing us the closer it is to this level 1.275, the closer it is to trading at this level, up and down, up and down, up and down, the closer it will be to breaking this level. More than likely, we want to see price break this level, retest, and then on the retest, we will sell down to our institutional level of 1.27 thousand. Okay, so that is what we're waiting for, and essentially that is our trading strategy. Okay, so we see price action has come down, but right now we're looking for a break and a close. Let's come down to the 5-minute. So, price action is trading along this line. We've already determined that it's coming down. We want to break this 1.27520 level and have price close above it on the 5-minute time frame. And once that happens and it draws back up and retraces, that is our trigger point. We're going to get in and we are going to sell down to our sweet spot of 1.27 thousand. Okay. Okay, so while we're waiting for GU to drop, I've also identified a setup on GJ. So price is dangling here at this 135,500 zone on the 15-minute. As you can see, we are in a downtrend. Price is there, so we drill down to the 5-minute, make it this larger. We go to insert shapes. We put a rectangle around this zone. Okay, so once price breaks and closes below this red box on the 5-minute time frame, we are going to enter into a sell, and our next institutional level is at the 135 line. Also looking at yesterday's previous day low for Wednesday. The low is here, and that comes before the institutional level, so that may be a point of support that we may look out for. We also have a midpoint, a sweet spot midpoint where the white tracer is at 135.250. That also kind of coincides with the Wednesday low of the day, indicated by this black tracer. So this is going to be a little a major area of support where you could probably see either a bounce or just a reversal, a retest, reversal and continuation down to 135. So this is a zone where you want to be careful of. But however, once we break from this box, the area that we are looking to sell to is the 135. And again, we're waiting for the break and retest, because that gets our risk to reward. It's like a 1 and 2 risk to reward, because we would set our stop loss at above, just right above the last higher high, which would be right here, and that would just make this a more precise entry. Okay, so we're still waiting. Okay, finally, on the 5-minute chart, we got our close below the red box here. We got a retest. We would have got in here. And even if we missed that, we have another close here. We could have got it right here. And now we wait for price to come down to our institutional level 1.27 thousand. That's for GU. And GJ. Well, it appears we've already hit. Oh no, we want the level to come down to 135.203. Our assumption is that price is going to come down to 135. That's the assumption. So we'll see. But in essence, that is institutional trading. come back next week where I will provide more examples, more in-depth analysis, also using Fibonacci to help accurately enter into trades. Hopefully this video was helpful. Please like, share, subscribe to my channel, and I'll see you guys on the next video.